some amazing technology. Now we're going to talk about the money. So we know that London's venture capital ecosystem has grown massively over the last 15 years. 15 years ago, our startups were raising about $1 billion a year. This year, so far in 2025, it's 13 billion. That's great, but as we shift more into frontier innovation, which we're talking about today, is the capital fit for purpose? We know that these deep tech and life sciences businesses take longer to get to profitability, and they can be much more capital intensive. So is the venture industry and the capital markets as we've built them today, are they fit for purpose for frontier innovation? And I couldn't ask for a better panel to answer this question with me today than who we have with us. So we have Greg Smith, who is the CEO of IP Group, which is one of the biggest investors in deep tech in the UK, and they've got over £2 billion in assets under management. We have Janine, CEO of Innovate Finance, who's going to be giving us a perspective on how innovation in the finance industry itself might be able to help us crack this challenge. We have Alokik Advani from Fidelity, who is investing in ventures all over the world, so brings that real corporate venture perspective. And last but definitely not least, Michael Moore, CEO of the British Venture Capital Association, the voice of British VC. So, to get us started, Greg, you're very much at the pointy end of helping businesses to raise and investing yourself. What do you think is the biggest barrier that we have at the moment in terms of capital for frontier innovation businesses?
Well, I'm going to elaborate a little bit on a point that Anne made on the first panel. So the UK, we're very good at denigrating ourselves. We're brilliant, it's almost a national pastime at saying how bad we are at stuff. So I'll spin it into something a bit more of a positive message. So we've built one of the most effective innovation finance ecosystems in Europe. Our deep tech spin-outs are worth at least 2x the nearest country in Europe. So we're really good at this stuff. As Anne said, the gap emerges really sort of post-seed and at the Series B stage. And again, that could be seen as a problem, but I think the good news is that's probably the most appropriate bit of early stage venture where long-term capital providers like pension funds and local government pension schemes should be thinking about investing, not right at the early stage. So sort of the bad news is the significant gap is at Series B and beyond. The good news is that's probably the most appropriate bit for pension providers, etc., to think about investing.
Thank you. Well, I'm going to piggyback on your point about pension providers and come to Michael. We've been hearing a lot in the UK over the last few years around the reform of our pension markets, and particularly what's called the Mansion House reforms, to encourage our massive pension funds to invest more in domestic assets, in private assets, and in innovative companies. Michael, from your perspective, is it going to make any difference? And if so, when?
Well, it has to, because otherwise all the points and our national pastime of talking ourselves down will be fulfilled. We will actually prove the point that too many people like making. But to build on Greg's point and the earlier contributions from this morning and the excitement of what's still to come, don't we have the most amazing science and frontier tech, the people, we have the environment here in London and across the UK in which you can foster, and the journey we've been on for the last decade has brought all of that substantially forward from where we were. But there are still some awkward truths, and Greg's neatly pointed out where the kind of gap in the system is. What we need to be able to do is make the UK as strong a backer of its own talent, its own ideas, as we see international providers. We've got a slightly stark statistic that 16 times as much pension capital from international sources is invested through UK funds for UK and other European opportunities as there is UK pension fund capital. That is the bit that has to change. So yes, the Mansion House reforms, which for those who have quite rightly opted out of learning anything about that, it's basically about the biggest financial institutions making a commitment to move from where they start to a position where 5% of default funds under management will be allocated to unlisted equities. Now, you can go down all sorts of wormholes about what all those different definitions mean. There's been an accord, there was a compact, now there's an accord, even I can't keep up. up, and there's a sterling 20 as well. There's lots of effort. How soon? Sadly, not quite as urgent as we all think is required. But what we do see is the government making a serious effort to reform the pension world. So the mega funds they're talking about for DC, the reform of LGPS funds so that there's that flow. So we get expertise at the investing level. There's loads of other things that need to be fixed, but those starting points are hugely important. The momentum and the push from politicians and from our industry is unprecedented.
Brilliant, thank you. So pension funds clearly a really important role to play. Alokik, I'd love to hear a bit from your perspective. Where do you see corporates and corporate venture in particular playing into this?
So I think firstly, just addressing the frontier point and the capital stack, I think it's really important to think about that scale-up capital that comes in. And then I think beyond that, it's the opportunity of where are the exits, where are the IPOs. So it's a really important point. We've spent a lot of time on it. There's been some listing reforms across the UK. But the numbers just don't lie. We just don't have as many, right? I think year to date is 12, maybe 13, 14, some numbers of that at peak versus 120, maybe 4 or 5 years ago. And it's not just the US. We constantly have this argument of UK versus US, but you're seeing now the IPOs come in from India, China, that's taking up 3/4 of sort of the listings around the world, including the US. So we have a bigger problem to solve around that entire journey, going from this phenomenal early stage startup capital to the ability to then continue to fund, to Greg's point, through the scale-up journey and continue to create the outcome so everyone doesn't have to cross the pond. The corporate side is interesting. And again, I was thinking about our experience through some of this, and the capital is critical, right, for some of these early journeys. What we see, and again, coming with that corporate mindset, is you need, the companies also need the validation. They need to get the early anchor clients to be able to come beyond the capital. That's where the corporate venturing can help. And with that, you have a few different things that may need to change. It's not just to get a client in, but it's the system to allow for efficient procurement. To get a young startup to go through a large corporate procurement system is hell. It's absolute murder. For anyone who's done it, you're ping-ponging through the building, you may never get anywhere, and you're filling out reams and reams of paper. So we got to solve that. Maybe that's a form of catalyst that we can do as well.
It's a really interesting point about procurement. And you sit in Boston. Give us a sense of when you're sitting in a similar room in Boston, what are the conversations about capital there? Are they similarly worried about late stage, or are they doing a better job, to Greg's point, of not being so down on themselves?
Sorry, just to correct you, I sit here.
Oh, sorry, you
but
sit here.
We do look at investments globally. So I think the point is, I feel like there's a more fluid conversation about capital and growth and coming through different stages of the journey. I think the uniqueness with some of the areas we focus on across the UK and where the strength comes from is deep tech, is science, is pharma, is AI. And some of those things, to the point you made earlier, Laura, takes ages of time to scale. And it's not always a venture journey. You have to have different forms of capital. You might have to have longer term patient capital around the point with pensions. You might have to have sovereigns. You might have other kinds of people that need to play for part of that journey, not just a venture story.
Thank you. And Janine, you look at finance and how we can innovate our financial systems. What can you see coming that might help here?
Yeah, absolutely. And I mean, just a couple comments as well in leading into that conversation. So my view is on fintech, right? Financial technology, financial innovation. And to your point, Greg, about how we talk ourselves down, the UK is a global leader when it comes to fintech, right? For the past decade, we have received more investment than anywhere else in the world, bar the United States. We have consistently, for many years, been actually ahead of all of Europe combined. But, and I say this with a but, we put out our investment landscape every 6 months, and for the first time in July of this year, the UK has dropped from second place down to third, and we're now only ahead of Germany and France combined. So we need to take some significant, some critical action to help us actually solve for these capital challenges. And I would say that when you look at the entire stream of capital, we have challenges at all different levels. So whether it's on the growth side, whether it's on the late stage, on the early stage as well. I think on the Mansion House Compact, the Mansion House Accord, Michael, you said it very eloquently. We might not be seeing the progress that we want early enough. So actually one of the things we've called for in our budget recommendations is that not only we have a target for that 5% by 2030, but we actually have annual targets to make sure that capital is going in now and that fintechs and that later stage company startups are seeing that as well. I would also say from the fintech side of things, and as we're talking about frontier technology, we do see a particular challenge for those firms that are going from between seed through to Series A, because you're at a point where you're post-revenue, but you still need that additional growth. You're too late to be applicable for EIS or for retail investors, but then you're also too early to really be attracting that VC investment as well. So that's something we're trying to change that mindset too.
Just to give a bit more context to the numbers, and I should have done this earlier, the 5% is the target by 2030. We started, the first measured figure was 0.36%, and it's now got to the heady heights after a further year of 0.6%. So the speed of progress is not quite what we'd be hoping for.
Very good. Well, let's hope you two are well positioned to speed things up. I'm going to ask each of you to close, just to give us the one thing that in your view we could change that would unlock capital for frontier businesses in particular. Greg?
Yeah, it's very interesting because we think about this all the time at IP Group. We're the biggest investor in university spin-outs in the UK, so we're always thinking about this stuff. I mean, the one thing that consistently comes back, and we've heard it, I think, twice already this morning, is Lex mentioned that his mum was an NHS nurse. Laura mentioned it's really hard to procure things into the NHS. Like the NHS is the envy of the world. It's a centralised health system. Yet one of the most important things that our young companies need, probably more than capital actually, is customers. And we hear consistently it's a nightmare for young businesses to procure, or for the government to procure technology from those companies. So I think what one thing could we do? We could create a far-reaching innovation arm within the NHS. We could ensure that is overseen by a panel which sits across not individual trusts, but across all the trusts. It should favour British businesses. If it's necessary that there's no British business that can do the service that's required, it should be partnered with a British business that can learn alongside a non-UK business. And if we're dealing with national data assets, we should absolutely have the national data assets looked after and analysed by British businesses. So I think that sort of innovation arm, let's make the power of the NHS also a commercial powerhouse.
We are working on it actively in London. Let's talk later, Greg. Brilliant.
Absolutely.
I mean, I think the other point that's a big issue across the capital stack and investing is liquidity. I think the notion, we can talk to IPOs, we can talk to exits, we can talk to all of those and acquisitions by corporates. But I think the paradigm that's in play now is you have founders staying private for longer because they can. There are alternatives. You have venture debt, you have secondary liquidity, you have secondary trading, etc. off these private platforms. How are we able to make this more systematic? How are we able to make this more engaging? There is an initiative by the FCA to sort of introduce PISES, which is this new venue to trade secondary stakes. Hopefully that can be successful. But that notion of creating secondary liquidity without it only being an IPO exit point is really important.
Yeah, agreed. And I think we are not talking enough about PISES as an opportunity for secondary liquidity. You're absolutely right.
If I can zoom back up to 40,000 feet, I actually think we need to have a much deeper conversation about risk appetite and the willingness of the different swathes of London's capital markets to look at the opportunities that are here through fresh eyes and understand what it is they're investing in and go on the journey.
And understanding that these are new asset classes that don't necessarily have the same risk return and timelines as venture of the last decade.
But have a proven track record globally. Let's not pretend, let's not allow people to say, oh, we don't know enough about you, we don't see the opportunities, we don't see the returns. They are there, they're well documented. Anybody who doubts it, we've got the numbers.
Brilliant. Thank you. And Janine?
So, Michael, you've taken mine, but I'm going to take it one step further there, because I think we need to incentivize the founders and the entrepreneurs that have already created companies and then exited to invest in some of those new technologies and the frontier technologies in those earlier stage companies, because they do have the risk appetite. They know what the journey is like, but we need to create the environment here. So looking at things like business asset disposal relief, where you had a 10 million lifetime allowance that went down to 1 million in 2020, that needs to go back up. We need to facilitate those founders and entrepreneurs to be able to then invest in the next generation.
Really important. Well, did you want to come back?
Well, I was just going to say, and also we need to champion them. We sort of forget. I've had 2 founders in the last month who have talked about exiting businesses, and the UK press doesn't care. And it's really disappointing. So I think we need a sort of a Mansion House press compact where we talk about, at least 5% of column inches has to go into championing these amazing British businesses.
I love that. You heard it here first. Greg, Alokik, Michael, Janine, thank you so much.